welcome to ET Now Startup Central, India's first and only daily show dedicated to startups and entrepreneurship. I'm Chandra Srikanth, joining you live from India's startup capital, Bangalore, and we have a power-packed lineup over the next 20 minutes.
And I'm Krishna Kumar, coming to you live from ET Now's Mumbai studios. First up, I check on all the headlines at ET Now Startup Central. First up, on our weekly funding meter, weakness in the public markets catches up with Indian venture capitalists as companies raise smaller amounts compared to previous rounds, even as the government gets into the funding act. Valuations in consumer internet have gone through the roof and a correction is inevitable. That's the word coming in from former Infosys CFO V Balakrishnan, who recently roped in Rakesh Jhunjhunwala for his Xfinity startup fund. BankBazaar.com, the online financial marketplace based out of India, announces its international business expansion within Asia with a special focus on Singapore. A chat with CEO Adhi Shetty coming up. On our weekly app meter, we get you the top 3 payment apps trending on iOS as well as Android. And in our special segment, the best advice ever, we have Kunal Shah of FreeCharge telling us the best advice he ever got in his career that you can benefit from. All right, to kick things off, it is time for our weekly funding meter, where we get you a 360-degree perspective of all the funding action in the startup ecosystem. Chandra?
That's right, Krishna. This funding meter is not going to be a happy story because VC investments are clearly on the decline. The weak sentiment in the public markets is catching up with VC investments as well. To really give us more perspective on that, we have Arun Natarajan, founder of Venture Intelligence, joining us on the show. Arun, thanks so much for coming on ET Now Startup Central. Let's kick it off. Tell us about the key deals last week and also the overall amount pumped by VCs.
So we clearly, for the first time in the year, we are seeing a week-on-week dip in venture capital investment numbers. We've seen something like 9 transactions go through worth about $24 million, which is kind of a steep down from the previous week, which saw something like $71 million getting invested across 12 transactions. So for the first time in the year, and which is a bit, I would say not surprising given how much volatility we've seen in the public markets, and also a lot of nervousness, coming in from Silicon Valley about the startups there. So for the first time, we are seeing a dip, and it's kind of restricted at this point to the growth stage investment. Early stage seems quite fine.
All right, Arun, this is Krishna here from ET Now's Mumbai studios. I wanted to ask you, the amount is relatively lesser compared to previous weeks. Is this a one-off, or is it a sign of market weakness catching up?
So to the extent we have seen this weakness, it is in the growth stage segment, and it's probably expected to continue. And so, for example, if you've seen the kind of investors that have been investing, we saw Snapdeal, for example, a very huge transaction of $200 million. It doesn't reflect in the venture capital numbers, but it's something that is reflective in terms of the kind of investors who are investing. So we have the pension fund from Canada coming in and picking up a stake from an existing investor in Snapdeal. So the very, very strong hands are still playing in the market. And very interestingly, it was revealed that Tiger Global, which was considered as having left India and no longer investing in it, was revealed that they had invested in an online video company called the Viral Fever and as much as $10 million. So the selective transactions are indeed happening, and there is no real sign of panic in the venture capital segment, especially in the substantial portion of venture capital is being accounted for by the early stage. That continues to kind of even thrive, I would say, at this point. But to your overall question, will the nervousness catch up? If the prolonged nervousness period continues, yes, there will be a bit of a pause. At this point, that's not visible in the early stage segment.
Arun, despite the gloom and doom, we still saw a couple of technology IPOs scrape through, namely TeamLease and QuickHeal. What were the factors at play, and who were the investors who benefited as a result?
Sure. It was very gratifying to see, an enterprise software company in the Indian market, raise as much as, 451 crores. I am talking about QuickHeal here, the security software company. There was a bit of issues around the IPO, but the point is, IPO is such a phenomenon where the window opens and closes, and timing is so much of a factor there. The fact that such a company raised as much as it did, as well as managed to give the existing investor, which is Sequoia Capital in this case, 3.3 times their return capital, and they continue to remain invested substantially in the company. It was quite gratifying to see. And we also saw a TeamLease, which is in the staffing services space, also pull off an IPO last week, and again, very healthy returns for their investors. Gaja Capital registering as much as 4.3 times their investment, and ICICI Venture registers something like 3 times their investment. It's very gratifying that this market still has appetite for those kinds of IPOs to happen.
All right, Arun, before we let you go, finally, one question. We also saw the government getting into funding, backing some venture capitalists. Welcome sign, isn't it? Considering foreign source of funds are drying up all over the place.
Sure. So the nervousness is, something that will, happen in waves. But, the government, like you said, is indeed a very stabilizing force. And it's nice to see the government pick and choose the sectors that they would support. So, for example, the Department of Electronics and Information Technology has, launched their fund of funds, which is called the Electronics Development Fund, very clearly focused on supporting startups in the electronic semiconductor space, which do not typically get the regular venture capital money which comes in foreign sources, which, as we all know, goes after consumer internet and more consumer plays. And we also hear talks about the Department of Biotechnology making plans for a 100-200 crore kind of fund. Again, biotech is not a sector that attracts the commercial VCs. So to the extent the government is picking and choosing those sectors that require support, which is not getting this support from the commercial VCs, it's definitely a good sign.
All right, Arun Natarajan, founder of Venture Intelligence. Thank you so much for taking time out to be with us here on ET Now Startup Central and giving us the perspective on all the fund in action over the last 1 week. Up next, we have a big voice here on the show coming out all the way from Bengaluru. So let's head across to Chandra.
That's right, Krishna. Former Infosys CFO V Balakrishnan, who founded Xfinity Ventures, believes that consumer internet companies' valuations have gone through the roof and that a correction is inevitable. Now, remember, he roped in big bull Rakesh Jhunjhunwala recently to invest in Xfinity. So he is still bullish about the B2B space. That's where Xfinity really invests in the whole enterprise space, the Internet of Things space. So if you're a startup in that area, then Xfinity certainly has funds for you. Let's listen into what V Balakrishnan had to say.
In the B2C space, I think the valuations are gone beyond imagination. And of course, they are cash guzzlers. They raise a lot of money, but they're not built a sustainable business model, which is focused on growth and profitability. So I think that is a concern for the markets, because at the end of the day, you need to build a sustainable business model which is profitable. You can't keep on taking capital and make loss and build a large company. That is not sustainable. So a lot of B2C companies are facing problem in raising money.
Xfinity, as far as your fund is concerned, it's focused more on the B2B space. So, are valuations more realistic there, and what are you looking to invest in as far as that space is concerned?
See, B2B, I think the valuations are more realistic. They are not cash guzzlers. It's not a winners take all market. Same kind of ideas, 2 or 3 can remain at the same time and create value. And these companies don't require that much amount of cash. They hardly require some $25-30 million to build a product and market. And they become profitable in 3 to 4 years time frame. That's why we like the B2B space, and that's why Xfinity as a fund is focused mainly on B2B space.
Right. You recently, got Rakesh Jhunjhunwala as an investor. Are you looking at more such marquee names for your fund? And are you looking for the next fund also as far as Xfinity is concerned?
We are looking at floating an offshore fund because we believe that US-India corridor is the best corridor to invest in the startup space. Because you are a rupee fund, your ability to invest outside India is limited because SEBI allows only up to 25% of the capital can be deployed outside India. We need to create greater flexibility in our investment. So we are seriously looking at an offshore fund.
If I'm a startup in the enterprise space and if I want money from Xfinity, what kind of business should I be in?
No, there are 4 or 5 themes we follow in our investment. First is cloud infrastructure. Cloud is a norm today. Second is mobile solutions. Mobility is a big thing. Internet of Things, because all the devices are becoming more intelligent. Big data analytics is a big theme. Artificial intelligence is a theme. And of course, security as a layer on top of all those. So these are the 4 or 5 big themes we focus on the invest in B2B space.
Chandra there in conversation with V Balakrishnan, former CFO of Infosys. Moving on to the other big headline that we're tracking over here. BankBazaar.com, the online financial marketplace based out of India, has initiated its international business expansion within Asia with a special focus on Singapore. And we have CEO of BankBazaar.com, Adhi Shetty, joining us live here on 80 Now Startup Central. Adhi, thank you so much for taking time out to be over here. Tell us, about your overseas expansion plans. What exactly is the strategy over there?
So I think 2 important things, right, for BankBazaar as a business. One is customers in Asian markets have the same requirements and needs and gaps that Indian customers are facing. You have a plethora of options out there amongst financial products, and you need a neutral platform to be able to help customers access the right financial product. Not the product that's right for the manufacturer, but the right product for the customer, depending on the life stage. Over the last 7 years, right, BankBazaar has built an award-winning platform in India. So, for example, just last week, we won the IAMI award for the best financial website in India. So we've done a lot of work in terms of innovating and delivering world-class products built in India. And we're now taking that internationally, starting with a head office in Singapore. So we're setting base in Singapore, making use of the government and regulators' support in Singapore, and then we're going to be spreading across the Asian markets.
Adil, how are you going to ensure, management bandwidth in such a mature market? What plans have you put in place there?
So we've made some really strong hiring, right? Because I think that sets the DNA for the culture that builds internationally. So we brought on board Aman Narayan. So Aman was previously the global head of digital banking at Standard Chartered Bank. So he spent about 15 years there managing their direct-to-customer channels, including internet, ATM, and any other direct channel which reaches out to the customer. So he's worked across, 3 continents, built successful global-sized channels, and now it's very exciting to see a very senior, experienced professional like him, right, now don his startup hat and drive our international foray as the CEO of the international BankBazaar business.
All right, Adil, let's get back home to India. Then tell us what's the kind of traction you're witnessing over here, and what's your sense, in terms of the size of the market at this point in time?
So, Krishna, currently we're at 50 lakh visitors a month, right? We were at 10 lakh visitors a month when Sequoia invested, and now, we've scaled it up to about 50 lakh. In India today, right, there's an interesting double phenomenon which is driving the fintech tsunami, right? So one phenomenon is customers, whenever they have a question, rather than talk to their parents' banker or talk to their friends, right? They just pull out their smartphone and they say, hey, which is the best credit card for me? Which is the best mutual fund for me? So the phenomenon of the smartphone, right, becoming our access to information is increasing dramatically. So I think we've all seen the reports which say that now there are about 300 million smartphone internet users. One can debate how many of these are really active, but the phenomenon of people coming online is increasing dramatically. Secondly, and more importantly, right, is financial institutions are investing deeply in tech automation. So they're trying to say, how can I use eKYC? How can I use Aadhaar? How can I use some way of making this process more automated so I can deliver it on the smartphone? Now, because of these two waves, right, there is a almost like a tsunami being created, which Bank Bazaar is looking to ride, which says when consumers come online, when banks digitize, how do you create a paperless user experience for financial services? So if I'm in a town somewhere and I want a mutual fund, can I just apply on my phone, give my eKYC, and 30,000 rupees of SIP be purchased and delivered in my phone in 30 minutes? Now that kind of reality, right, is coming to India very soon, and what we're trying to do is speed up the process to bring that kind of paperless transactions to India.
Adil, the one question that everybody likes asking websites, what plans do you have as far as monetization is concerned?
Got it. So, our monetization is we don't charge the customer anything. So, while we have 50 lakh visitors who come to the site every month, there's no charge that we charge them to access the right financial product. We monetize via our relationship with the banks, and the banks are actually quite happy to share with us a small fee for the business that we generate. The reason being that when Bank Bazaar is used, right, there's no physical infrastructure, there's no branch, there's no people, there's no requirement for audit. It's just a very lean digital delivery paperless structure. Now that generates a lot of savings for the bank. Now a small portion of that savings, right, gets passed on to Bank Bazaar, which is how we monetize our business model.
All right, Adil, on that note, I'm going to ask you one last question before letting you go. Do banks with standalone sites have an advantage at this point in time in the online fintech market? How does Bank Bazaar compete with them?
That's a great question, right? I think there are two types of consumers in India today. So the consumers who come to Bank Bazaar, right, are the people who are looking for the right customized offer for them. So they realize that there are 50 financial institutions out there, and they're trying to say that, hey, I want a car loan, or I want a fixed deposit, or I want a debit card, or I want a credit card. And they're trying to say, hey, between the 50 financial institutions, which product is right for me? Now, interestingly, on Bank Bazaar, right, data shows us that 85% of the people applying to a particular financial institution on Bank Bazaar have no prior relationship with that financial institution. I repeat, right? 85% of the people applying to a particular financial institution in Bank Bazaar have no prior relationship with that institution. So what appears to be happening, right, is they're choosing the offer which is most customized to them. However, I think customers who are loyal to a brand, and there are quite a few of them, will continue to interact with the bank's website or the manufacturer's website or the branch or the DSA, and that will continue to happen. So we think that there are two types of customers. Now, the interesting thing about the customer who looks to compare, right, I think it's deep within the Indian consumer psyche. We want to see what is the best customized offer for me. So me as an individual, right, I have a home loan from a particular bank, a car loan from a particular bank, a savings account from a particular bank, and a mutual fund with a different institution. And I actually do it because I took the best offer available at any point in time. So when I was taking my car loan, I tabulated everything. I said what's happening. I went online, I applied, I got instant approval, and I went forward. And I think the bucket of customers who want this ability to access the right product among 50 institutions, I think that bucket is growing rapidly, and I think Bank Bazaar's growth, right, is proof of that.
All right, Adil, we will let it go at that. Adhi Shetty, CEO of bankbazaar.com. Thank you so much for taking time out to be with us here on ET Now Startup Central. Moving on from Bank Bazaar, it's time now for our App Meter. It's time for App Meter powered by App Annie. And this week, we take a look at the top trending payment apps on both the iOS as well as the Android. And there you go on your screens. The top trending payment apps on Google Play Store is Paytm number 1, MobiKwik number 2, and FreeCharge number 3. Those three are the top payment apps as far as the Google Play Android platform is concerned. Time now to pull up the top 3 payment apps as on the iOS platform. There you go on your screens. Top 3 payment apps. Paytm, again, there is State Bank Buddy coming in at number 2 and PayZapp coming in at number 3. Paytm, State Bank Buddy, and PayZapp are the top 3 payment apps as far as the iOS platform is concerned. Remember, our weekly App Meter is powered by App Annie. And with that, it's back to Chandra in Bengaluru with the best advice ever.
When you talk about payments, FreeCharge can't be far behind. So on our Best Advice segment, we have FreeCharge founder Kunal Shah sharing the best advice he got in his career that you can benefit from.
I think it's not best career advice, but I think best career realization was that I realized that if I stayed in a job, I could predict 20 years down the line what I could be. So that was a perfect time to realize I should be quitting my job and starting up.
That's some frank thought there coming in from Kunal Shah. But with that, we come to the end of today's Startup Central. But ensure you stay tuned in tomorrow, because we are going to get you special coverage of Search, the biggest technology conference that's coming right here in Bangalore. Over to you, Krishna.
That's right. Chandra's going to have a very busy couple of days thanks to Surge that's going on in Bengaluru. Can't wait to see all that's going to come out of there. But with that, it's a wrap on this edition of ET Now Startup Central. This is Krishna Kumar signing off, but keep watching ET Now because Market Watch is coming up next.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.